Well, hello and welcome to the weekly meeting. Let me mute the loud people. All right, there we go. We had some requests to make the weekly meetings public. So what we're doing, we're just going to, throw the disclaimer up at the beginning, and so we can cover that base. And then what we'll do is go on in the YouTube channel. So what we'll do is have a playlist with all the weekly meetings in them. Because right now they're just unlisted, so you have to have the link. But going forward, they'll all be public on the YouTube channel. So if you want notifications directly, you can always subscribe to our YouTube channel. We always appreciate that. So, and you'll get instant notification as soon as we load up any videos. So so that's first order of business. Next up, we're going to be doing our next webinar September 16th. So 3 weeks. So the focus of that, we're going to go through earnings. So we'll go through, we'll have the earnings playbook all completed, and it's going to be me and Shawn doing this one. So we're going to go through each strategy. We're going to go through bulk testing, theory, everything. So we're going to cover all our bases for the earnings. So look for that, those notifications to come out in the next, week or so. All right, so that's item number 2. So in the share drive, I'll go through, we'll just kind of do a quick review of feedback on here. So here's the feedback we've gotten so far. I'm sure there's a few missing. I think Shawn had to add in some things. So that the vol rise in the earnings calendar, now it's set up just like the pre-runners. So we can test, I've been doing tests on that, makes it a lot easier. And I'll dive into that in a second here and just kind of show you. The export for the bulk, so we changed those also for days to entry and time of day for those earnings ones. And then the charts, the big one. So before we had, on the earnings analysis, there were a few symbols, well, more than a few, there's quite a few symbols that only showed, 2018. So we spent a few hours combing through and seeing what the issue was, and our programmers, specifically Reshma, did all the heavy lifting here to find out, why there were a few, that weren't showing past, I think it was Q318 was the last one. So that's been resolved and fixed. So you should be able, see up-to-date moves for all symbols. And, if you find any that are still showing back in time, please, let Shawn or I know, and we'll, we can remedy that situation. So, so that was the big updates as far as those. If you see things that, you put in, this horizontal testing, I know Sudhir had asked for this. This is this will be a big undertaking. So this isn't going to be like a quick turnaround like these, one day, a couple days. So so we have to figure all that out, as far as that testing. So we definitely appreciate all the feedback, and please keep it coming. So we can make this easier to use and a more powerful platform for you guys. So, and for us too. All right. So going into the And I'll do this every meeting. So I'll just put this in the chat to, come on. There we go. So that's the share drive. So I pulled a few things out of our common drive, but we still left all these write-ups in. So that web page is still being processed. We've done all our work, so it's just a matter of our marketing guy putting all the links and finishing the creation of those web pages. But pretty soon it'll be up under our resources tab, I believe, just like the study. So it'll have all those listed, and all those write-ups will be on there. And once that page is up, I'll take these out of here. So we've been busy preparing for Q3 earnings. So 2 of the strategies are complete as far as the baseline testing. So why is this showing weird? Yeah, this is different. How do I find the tabs? Because there's 3 tabs. I'll show you. Google Sheets. So, what was that? I don't think it's saved properly. Those pre-runners. Let me pull up. That one didn't look like it's saved properly. Yeah, so this is like the bearish. So I went through all the raw testing, wins over 80, and then best trades. So I did that for all 3. Not sure why bullish is showing this. I think it's saved on my OneDrive. So I'll fix that. But those 2 are done. We had talked quite a bit about vol rise, and I think this has good potential to be like our next good earnings trade. So what I did, I went through and I started with a strangle in 60 days. So I'm not sure this is the sweet spot. I'm going to run 4 iterations of this. So I'll do a strangle, and I'll shorten the days to 30, and then I'll go to a straddle and test that twice at 60 and 30. But there are, if you look over on best trades, there's really good profit factors, pretty good win percentages. It seems similar to kind of the statistics we get with the bullish pre-runners. So feel free to look these over. I don't think we've settled on a specific strategy yet, but obviously we appreciate the input for you guys. But those are all located in there, and I'll fix this pre-runner one. I'm not sure why it loaded improperly. So the one change I wanted to show. So on the volatility rise, so you can see now we don't have that previous week earnings week. It's just the specific days, so you can change all those however you want. I've been doing the strangle at the standard deviations for my initial tests. So yeah, I'm gonna keep working on this and obviously provide results, and then ultimately we'll pick one as like the sweet spot. So so what I'm doing as far as the next quarter, so I just move out to like 35 to 100 days. So, and I'm using these parameters up here. And then I'm doing the bulk tests from this group. So you can see like the first one starts 10-1. So, and I think that's technically these Costco, they're like at the very end. So I may move that out a little. Any questions on that, the updates or changes we've implemented, the bulk testing, anything like that?
Wait, Josh, this is Winslow. So this is not iron butterfly stuff. So volatility rise, it's like the pre-runners essentially, right?
Correct. So
It's before earnings.
it's before earnings. You get out before earnings. So yeah, so you're basically doing non-directional. So you're doing a strangle or a straddle. And I'm not positive. I think strangle will be better. But I can't say that for certain yet. But I'll have that answer soon. Yeah,
Okay.
so you're buying a call and a put. So it's either at the money or these are one standard deviation away for the strangle. Obviously, there's lots of iterations on where you want to pick your strikes, but I think if you guys find one that works better than this standard deviation, I'm sure it'll vary symbol by symbol, but we're trying to just find like a basic good rule of thumb for these. So the way this trade works, and you can read the write-up, if volatility is increasing going into earnings, if you're buying 30, 60 days out and you're getting an IV build, so that's going to help, and then help that trade, especially on the downside. It'll hopefully overtake any kind of time decay. But where these really can profit is if the symbol's moving too. So either way, it could be a bearish pre-runner or a bullish pre-runner. So I'm sure there's symbols that are bullish pre-runners that are also vol rise. So it's just like a different way to kind of play that. And I'm sure some if you get enough movement, this trade's going to work. I don't think it'll be as prevalent, as the bullish pre-runner, but the amount that you're outlaying, that's why I kind of picked the strangle initially. Is it's going to be cheaper than if we do, so this is like 700. If we do a straddle for Costco, it's 3,000. So just a lot pricier. So the one standard deviation is kind of going to be, just think of it. It's not going to be, it's higher than 30 delta, but 20 delta or something like that. So it's going to have to move. So stocks that are moving one way or the other, and they're also getting an IV build. That's the whole gist of this trade.
Yeah. When you have time, I'd like to just query you on the pre-runners on two particular examples, one that I've taken and one that I want to take, but it's running away from me.
Okay.
I did Broadcom AVGO, and I bought it Friday afternoon, and I got out at like 11 o'clock on Monday with my 25%. So
Right.
that worked just fine. It was $1,000 I spent. Made 250 or 290 or whatever. The next one I'm doing before the big earnings, third quarter earnings, I want to do Adobe. And Adobe, I was going to do a Delta 45, but Adobe is just like gone to the moon. they claim they're going to have earnings on the 15th of September, but no one's really kind of official. And I saw some claim that it was going to be the 10th.
Yeah.
And now, that'd be $2,500. And I'm thinking, well, maybe I'll pass that up for a while. I don't know what's happening.
Yeah.
But,
Well, I mean, you always have the 30 delta option to drop your costs on especially those high price ones.
but this thing's just gone to the moon. So I don't know if I should follow the news more. But that's something that I'm going to skip, I think.
Yeah. Well, I mean, obviously you have a pretty good track record on these. So, if you're feeling a little gun shy, there's always another one, right? So,
Yeah, I guess my question is normally these things just futz along and you just get in and all of a sudden people realize earnings are coming up and it goes.
mhm,
This one is like on a rocket ship.
yeah.
And so I'm thinking, oh, it's got to come back a little bit. So I don't know if you had any comments on that. But,
Well, I mean, there's a lot of stocks that are rocket shipping up, and it could be a one-day trade for you. If that continues, but it's always, when's the top, when's the pullback coming, things like that. It's difficult
yeah, okay, I'll stick to my.
to say. I mean, generally, you have a good, we have a good strategy, basic, easy to understand. Like you just kind of stick with it, and I mean, you're gonna lose some. So, but those high price ones, I guess you just put more thought into them, where the other ones are just like, yep, yep, yep. So I, I don't have a crystal ball. But maybe anyone else have comments on that?
Well, thanks.
Mm-hmm. Okay. Where was I? Yeah. Analysis. Okay. Okay. So I think we got our all-star ball crush player, team captain, and star player Shawn Glover here to walk us through some of the earnings stuff and screeners. You on there, Shawn?
I am. How's everybody doing? Good, good. Yeah, basically, I just have one comment on I wanted to see if anybody else wanted to talk about the Adobe. I can share my screen whenever, Josh, I think.
Okay.
As long as I share the right screen. Yeah, I had one comment on Adobe. So I think you should be looking at the Delphian, right? So yeah, Adobe's made some pretty big run-ups, but I did notice that Adobe, I did let's see, I did the earnings stuff as well, just kind of on my own, and Adobe shows up as a vol rise for me, although the backtesting portion of it, I still need to do some tweaking. So when you said Adobe, I wanted to look because I knew I had seen it somewhere before. I wasn't sure where, but I did this Adobe, basically the vol rise 20 days out. So obviously we're less than 20 days out, I think. But you could see that it shows up for the long straddle and the long strangle, but both of the win percentages are kind of low, 60%, but they both have a positive profit factor. And then I think this one is actually 40% for the straddle with barely a positive profit factor. So, that leads me to believe that we might see a little bit of a vol rise in Adobe coming into earnings. Now, I looked at the volatility on the options chain real quick on the other screen on Thinkorswim, and it was actually, in the 40s to 50s. So that vol might be, the implied volatility might be somewhat, low or average, I guess, right now, but we just have to look at the screener within Delphian to kind of check that out as well. So, there's you can take that and say, maybe I missed it doing the bullish pre-runner because it has moved up so high, but where is the implied volatility right now, typically to where it should be prior to earnings, things like that, and you might be able to find some other trades in there too, So it's kind of expanding on what you were already looking at and kind of taking it a couple steps further. So I just wanted to kind of throw that out there. But it has. I mean, we're talking it's at 520, and from what today, from yesterday to, yesterday to today, it gapped up from 484 all the way to 533. So a really big move.
Yeah, it was, win percentage was 80% in the pre-runners for
Right.
11 days ahead of time for the earnings.
Which been in what, yesterday, I guess, maybe? Or
No,
would that
the
have-
31st of, because it's the 15th.
Right.
So the 31st, I was going to get in on the 31st of
Okay.
August. But maybe
Okay.
I'll screw that up.
So on the 15th, right. Yeah, there you go. Looking at it that way, right?
Yes, on Monday.
On Monday, yeah.
But it's just
Oh, I was looking.
like, it's moved so quickly. It's like
So
Google.
much, right.
Yeah.
But Winslow,
like-
you don't count, Winslow, this is Joanne, you don't count the weekends, right? You're just counting
Correct.
the trading days, correct?
That's right. So from the 15th, it's 11 days. So
Oh, 11 days, okay.
Yeah.
Right. Because you're doing these five, and then one more. You do have a holiday there, but either way, I think the 7th is a holiday, right? But Labor Day, but either way, yeah.
11, yeah, the 11th, yeah, right. I mean 11, because I skipped the 7th.
Right.
I was just thinking that, I mean, it's like, I thought they did earnings or they were cheating or something. I mean, it went up, I don't know, 40 points.
Right.
I like the fact that they're big, and so you only have to buy one option or whatever. So, I mean, it's funny that I'm asking because the next earnings season, instead of buying $1,000, I'm going to buy $2,000 so I can do Apple and Google. I'll push Google to 3,000 or whatever. So here's another one, and I guess, if you add NVIDIA to FANG and Adobe to FANG, I guess this is like a FANG stock. So I should just relax and do it.
Yeah. Well, like you say, the options are fairly expensive. So, I mean, I just pulled up some because what I do sometimes is I'll analyze. So, they have earnings coming out, let's just say on the 15th as of right now is what they have posted. So I want to look at, let's just say I'm not going to trade the option that expires on the 18th, but that should give me, that should take the volatility into play. And then that should give me the movement that I'm looking to get, up into earnings. So even looking at those, the September 18th options for Adobe,
I went out to October.
Right.
To October. Yeah.
Yeah, and even the 31 delta on those that I'm looking at, I mean, you're talking about 12 to 1250. So really expensive. And then if you go out to October, obviously more time you're going to pay a little more money, but I think kind of helps. I think it helps pull back that risk a little bit, just like when we talk about with the volatility crush stuff, it pulls back the risk a little bit, even though you're outlaying a little more money to obviously trade those options. So.
Oh, so I suppose, I was always looking at 60 days, 50 to 60 days. So I could do a closer in one, but the time delay, the time thing really kills you. So I could
Right.
do it.
Yeah.
Yeah. And I just kind of look at it just to get an idea. I don't really, I would trade the Octobers to have more time because I think that time kind of helps you in the long run, but you just, like I say, you're just going to outlay more money initially to hold that option.
Yeah, but your 25% is bigger then.
That's true. Well, that's true too, right?
Yeah, I got to get used to that for the next thing, making 500 instead of 250. Okay, all right. Well, I'll sleep on it.
But like Josh said, I mean, it's such a big mover that you could be in it today or tomorrow, or on Monday, and then you could be out, the next day pretty easily based on some moves that these things make.
Right, I was for Broadcom. I mean, so my average time in these things is like 5.6 days, and that includes the weekends. So, I mean, I have to do I do it on Google Sheets, but I finally downloaded an old version of Excel, and they have a function, a workday function, so I don't have to
mess with it. Yeah.
Yeah, I can get.
Oh, that's cool. Yeah, I have to figure out Josh, do you know how to use that? Because I need to figure out how to use that.
Use what?
The Excel, that formula you're saying, a workday formula, right?
It's
Yeah.
pretty
Yeah.
easy.
Yeah. Yeah, it's not.
Yeah.
I need to use that for some of these because you can see some of these. I just set these up to kind of look at them, but I just have to kind of go in there and I come to the calendar. I'm like, okay, let me kind of calculate backwards how many days, So, and I don't even have these sorted.
Table. You can have a lookup table for the holidays too.
Right. Oh, there you go. I got to use that.
Then the only other thing you have to think about is the earnings come out after the day or before.
Yeah.
Right.
So I think I would adjust the earnings, or I don't know what I'd do. I'd have a separate column there.
Right.
Add or
Well, the
subtract.
problem with the before and after, we don't know that until, a few, maybe weeks at the earliest before, like all these are unknown.
Right. Yeah, a lot of these, yeah. And you can see, AVGO is on here too as a vol rise, but you don't know where that volatility rise is coming from, right? I mean, coming from the calls, the puts, both, how that volatility rise is going to increase the premium. So this doesn't really tell you. Typically, I'll find some if they're on bullish pre-runner and they're like on a bullish runner, then maybe that leads me to believe I might be able to hold the options a little bit longer to make a little more profit after the earnings as well if I want to hold it that long, but that's obviously going to be a little more aggressive than some of these. But that shows up there. So, I try to do that. If I find the stock that kind of comes up on my bullish pre-runner and I'm going to trade it, then I want to see, okay, does that match up somewhere else within like a vol rise or a vol crush or some other category, maybe that I can push it a little bit further, or, maybe I can adjust the trade a little bit based on that, so. But yeah, cool. Well, that's a good one. The Adobe's a good one. So what I wanted to do was to show you guys what I've been doing with the, with the vol crush stuff, essentially. So, as we know, and as we've heard from Ashok, basically, the earnings data that we have, we're pulling the data from Zacks, and everybody knows that, lately, a lot of the stocks have been changing the dates, so the dates have been fluctuating. I even had some on the vol crush for this week that, we had it in Delphian on Sunday or Monday as one day, and then, they just had adjusted them or changed them. Zacks hasn't updated it yet, and we didn't update it based on that. So, always we're wanting to verify and look at some of these other sources to make sure the earnings dates are what they should be, especially, the bullish pre-runner is a little bit harder to do because you're talking 20 to 10 days out. The vol crush is a little bit easier because, you're doing it that day. So the earnings date should be pretty much set in stone when you're talking, 24 hours ahead of time, but still, obviously, we want to make sure we're verifying that data. So, especially when we're trading something based on an event like that. But what I've been doing is I wanted to show you guys, this screener here that I've been using seems to be going pretty well. Let me just pull it back up. Give me 1 second. And I would just, make sure everybody's trying to do something like this or similar to this to kind of get used to using the screener within Delphian. Like we've talked about before, a really powerful tool, and there's so many different things that we can do. We just want to make sure everybody's using this and cover any questions that anyone might have, for this actual custom screener that we have. So I'm going to kind of reset what I have here just to show you guys what I did, and then we can talk about it a little further. So I typically will come into my, my dashboard. I'll go into stocks. I'll go into my screener, stocks, and then screener. The Delphian studies I always look at. I mean, that's what we've created, Josh, Ashok, and myself, so I'll always look at these. If some populated, great. That kind of gives me a place to start, and I can move from there. These are always my first go-to that I want to check out. Nothing's here today. So what we can do is go into the custom screener. And in the custom screener, we have multiple things that we can look at. Again, there's so many different things that you can actually pull out to find some analysis to kind of see where you want to go for the day when you're doing some research. But for the earnings, I typically will come right into custom. I'll go into my stock filters. I'll go into earnings day, and I'll go within. Now we're already looking at today's Wednesday, so I'm just going to do within the next 4 days. And remember, the system is looking at on the 25th. So if I want to add in all the way through Friday, I got to add 4 days because, I'm talking about the day behind based on the backtesting portion of it. But I'll do within 4 days, any quarter. I'll click outside of that. And obviously you can just play around with the screener. If you don't get the results that you're thinking you should get, just come back, click on this screener and say, okay, let me try, 5 days and see what that does. You can always adjust it pretty easily and then hit find stocks and it'll reset it for you. So I'm going to do earnings is within the next 4 days. I'm going to do like we talked about. I'm going to go into my option. So I'm going to go to option filters, option type. I just want to pull out my weekly options. And then I actually want a new one that I've added in there. I'll show you that in a second. But what we can do is we can go into all symbol list, click liquid options. If I hit find stocks, it's basically going to run the liquid options list. So it's going to run these 2 screeners through the entire liquid options list. And this is the list that I have for for earnings coming up within the next 3 days. So we can see all of these symbols have earnings within the next 3 days. Doesn't mean they're all great candidates for what we're looking to do, but we're looking at these 7 different symbols here. I can always, what was I going to say? The liquid options list, we're talking about with the vol crush, we're only looking at options or stocks typically above $30. So I know I might want to just take this JWN out of my list. So I can exclude that later if I want to. Another one that I just started adding, and again, this is kind of for everyone to play around with and mess with on their own. I haven't actually tested it to kind of see exactly, the value of the data, but I've been looking at this implied volatility over here. So option filters, implied volatility. We can add some implied volatility to these stocks that have earnings coming up. So what I mean by that is we can look at the relative implied volatility on the weekly options, and I want to look at the weekly options that have 2 days out. So because I'm trading, I'm typically going to trade. Now these I might trade for the next week, but I want to see how this implied volatility for this week is affected on these options. Is it up or high, or is it just normal and nobody really thinks what's going on? But I want to say the weekly option 2 days out, and I want the 2 day out weekly options implied volatility to be greater than or equal to next week's, right? And when I look at that, I want to do it by 1.25. So I want to show me options that are basically 25% greater. So the implied volatility this week should be a 25% greater or higher than the implied volatility of next week's options. And then I'm going to type in 6 days here. And when I show you the readout, you'll be able to see what I'm talking about. So relative weekly 2 days out, the weekly options greater than implied volatility is going to be 1.25 than the next week's. So if I click outside, you can read the readout right there. So the IV of the at the money weekly options expiring after 2 days is greater than or equal to 1.25 times the at the money options expiring after 6 days. So, this can be played around with a little bit now, but that's what that readout should look like for you. If I hit find stocks, it should pull up the at the money.
Shawn, question for
Yes.
you.
Yes, go ahead.
Are you recording this?
I think Josh is, yes. And then this is the one that we'll put out there on YouTube like Josh showed before, and we'll put it out on YouTube.
Okay.
Yeah, it's definitely being recorded. Is he going too fast?
No, but I'm old. I have poor short-term memory, so it's rather than taking bunches of notes, it's easier to review the recording and go through the screener, at my own pace later on. So.
No
Yep.
worries. Yeah, and
It'll be
if I can look,
recorded and posted to the YouTube.
and then too, if this is something that, and this I think it can be pretty useful. Like I said, I want to look at it a little bit further, but this is something that I can throw into a Word document and have sent out as well. So, if it takes a little bit of time to do it, but I can put that together too if everybody would want that also. So that's not a problem.
Shawn,
yes. Yes.
This is Jean. I'm thinking, I see what you've written across the top there, but you said relative instead of at the money, but at the money printed out. What did I miss?
Well, it's showing the relative IV for next week's, but you didn't miss anything. So that's what I'm saying. I want to verify, where all this data is being pulled from, just to make sure that what I'm telling you I'm looking at is what we should be looking at, right? Because what I'm thinking this shows is at the money IV for this week on this VMW is 109, and then the next week's relative, which is typically what it should be, is around the 64 range.
Oh, okay, thank you.
So, but what I want to do is I want to make sure that, this, not only that this data is pulling in what I think it should be pulling in, but I want to make sure it's going to be useful for the volatility crush of what we're looking at. This is just something that I started kind of messing around with. So, play with it as well and get some ideas, and, we can kind of circle back next week if anybody's used it. But what I'll do is real quick, so you can see real quick if everyone wants to look while I'm looking on another screen. So this is showing you that basically, Ulta, everybody knows Ulta. Well, most people know Ulta, I guess. Ulta price is around 220 right now as of the close of yesterday. So at the money IV options should be, the IV should be 144 for this week's expiration, and your relative or next week's expiration should be around the 81 or 82 range. So let me look just real quick. I'm going to just use, so Thinkorswim might have a little bit of a different data versus, you know, what we pull in from the exchange where we pull our data in, but it should be fairly close. But let me just look to verify real quick. If I look at my analyze tool and on the 28th, so this is going to be a little different because I'm looking at real time right now. You're talking about the weeklies for Ulta right now around 130. And then for next week, my weeklies are around 82. So 82-ish, so 82.80 actually. So fairly close. You know, I would assume that we have earnings coming up pretty soon within the next couple of days. So I would really think that this implied volatility should actually be increasing, right? Where actually, based on what I'm looking at on TOS, it's actually gone down just a little bit. So does that make sense, everybody? Jean?
Yes, yes.
Okay.
Okay.
And let me pull it up too over here. Let me go and I'll duplicate real quick. And we can always look at it this way as well. So if we go into stocks, or excuse me, go into options, option chain. And if I type in Ulta, so then if I pull up this week's expiration, which is the 28th, so I got to go into table because mine shows up automatically as the graph, but this is the actual table. So if we look at that, we can see the IV here, 141. It kind of is a little bit small because it's squished a little bit, but we can see, you know, it's pulling that in for IV. So IV options that expire in this week, 141 range. We can see this one's 126. So I might say, okay, well, 141 might be incorrect, but if I look at the other ones around it, 139, you know, 149, so that 141 looks pretty accurate. Now, if I pull in next week's expiration, which is 9/4, we should see around the 80s, which is basically the data that we're pulling in here. So, you know, we can look at that and kind of pull it out that way. So, you know, that tells me that if I'm looking at trading some of these options, that, you know, the relative IV from next week's expiration to this week's is substantially higher, you know, 81 to 144. Now, you know, what I'm thinking, and somebody can correct me if I'm wrong, you know, this IV for this week's expiration obviously is going to increase substantially because of the volatility crush. Next week's is probably going to increase as well, but just not as much obviously as this week's expiration. So, you know, we could always take a look and move the 6 days out further to maybe get a more baseline of what the IV typically will be, you know, if we go out maybe 30 days, but I haven't looked at that yet. So does anybody have any thoughts on that? Okay, and then basically, so we can look at, I think this kind of gives me a good idea of, you know, all of these options you can see for this week's expiration, the IV is above 100, which is good. And then even some of these, this JWN is actually at 180. But again, we talked about that, you know, the stock's a $15 stock, so that, you know, the expected move might not be that big, or it might be too big for the value of the stock as well. So we have to be careful with that one, in my opinion.
It'd be nice to know the expected move there on that chart.
On the JWN? Oh,
Yeah.
Or on this chart here as a whole.
On the chart as a whole, just as
Yeah.
convenient.
Yeah, that's a good, let's put that in there and see.
We don't need calendar quarter. That's kind of stupid.
Right. Yeah. Which calendar are we looking at right now, right? So
Right.
Calendar quarter, no go versus expected move. The expected move calculation should be, I mean, in my mind, would be easy to put in there, right? Like it would be an easy screener to put in there.
Because you know what the butterfly would be, so you know.
Right.
Yeah.
Yeah, basically whatever expiration, it'll give you the expected move.
Yeah. I mean, it shows you here 18 bucks,
Oh,
but like
okay.
you say, if we could have the screener, that just populates it right there. But I don't think we can do that, right, Josh?
That's okay.
No, but like you say, it would be good to be able to put the screener in there for sure.
Or you could have, like, take the ratio of your 2-day to 6-day And it's, that one is like 1.8 versus your criteria 1.25. So maybe you could imply that the
Right.
higher that is, the happier you're gonna be when you take the iron butterfly.
The happier, right? But yeah, that's something I wrote that down, so that's one I'll put in that list so we can talk to them about.
All right.
JWN, because yeah, it would be good if you could just put that screener. So if we could have a screener that we just added an expected move on here, expected move for the next week's expiration versus the monthly or whatever, and you could see both of them. That would be good for this type of analysis for sure. So JWN, if I pull that up, you can see that JWN $15 stock. We're talking about $1.60 for the expected move. So really, really low, not going to be worth really anybody's time to do it, I wouldn't think, but you might find, good risk to reward there, but you're talking about a pretty tight move on a stock that has pretty high implied volatility right now. So, but yeah, so what I've done is I take these, I look at it, and, again, all the IV is fairly high. So what we can always do is we can always say, okay, well, let's create a stock list based on this. So I go into add to stock list. I'm going to create a new stock list. So I'm going to say, so these are stocks, again, earnings within the next 4 days. For myself, I just type in 08/26/2020. That's the date that I'm creating it. And I'll just do earnings within, 4 days. And then maybe add something on there. What was I going to add? Sorry. So earnings within 4 days, and maybe like vol crush, something like that. So again, those are just however you want to name them, but I want to know that I created it on this day here, this stock list, and then it's going to be earnings within the next 4 days is what the stocks that I'm going to look at if I ever want to look at this list. And I can always delete it later if I don't want it. If I hit save, it saves it. And then we can always just bring it over to the earnings analysis page. And we can come into earnings analysis, click on stock list. And then we can always pull up this stock list within the earnings analysis page. So again, predefined are ones that we set up for everyone. User defined should be ones that you actually set up. If you click on that, it's going to pull up the 6 symbols here within this earnings analysis page. And then we can kind of scroll through them and look at them pretty quickly to, just to kind of give that analysis on how often do they move outside of the expected move. JWN is Nordstrom. I didn't know that, but we can see $15 stock, and it is pretty volatile typically. Expected move has moved, so they kind of stayed within that range, but it is a mover, it seems. Somebody gonna say something? So we can always scroll over. And now we're looking at the net app chart. And once that loads, and then we can see net app has come to the downside quite a bit. We can see it's kind of touched that range, and went through it a couple times as well. So that one seems like that might be, and moves outside of the range too. So, this is one that we could test other strategies on. So when I first look at this, I say, okay, well, maybe it's not the best vol crush candidate based on what I'm looking at here, but let me test that out within the back test. But then also maybe I want to test it out, maybe just buying a put. I mean, look at all these times it's moved down substantially, or, buying a straddle or a strangle. So when I look at that, I kind of start running through, okay, well, maybe not the actual strategy I'm looking for right now, but are there other strategies that might be beneficial based on the chart or the graph I'm looking at here? So we can always scroll over. You can keep scrolling through the 6 if you want, but to save time, what I want to show you is I want to go into my earnings calendar, and then I'm going to pull it up in the vol crush and then show you how we can pull it up within that vol crush.
Josh, while you're doing that, I wanted to ask you a quick question on the last spreadsheet you have. Do you look at those, that data, and does it affect whether you want to do a 1 week or 2 week iron fly against it based upon the data that you saw there? Or do you always tend to stick with the next week's as opposed to this week's?
Yeah, I mean, typically, I think when you see that IV that high for this week's, I mean, if it's possible you want to trade this week's, because I think that's where you're going to get the majority of the crush, but you're also taking on that more risk as well. So I haven't nailed it down, but I mean, we've talked about it before, and I really, for my personal sake, I like to do the Monday and Tuesday earnings. Typically Monday, Tuesday, and if it's a Wednesday morning earnings, I'll do that week's expiration. But if it's Wednesday night, Thursday, and Friday, then I'm doing the following week's expiration. And that's just a personal preference. I think Josh has kind of pulled it back to even like Wednesday mornings. I think he's doing maybe Tuesday night, Wednesday mornings, he's doing next week's expiration. I think that helps take some that risk off the table of some of those big moves that we've seen recently. Now, some of the big moves like Salesforce today and Apple last week or the week prior and Facebook, I mean, those are almost unavoidable if you're trading those, whether it's that week's or the next week's. But yeah, I really feel like Wednesday morning and back to Monday, I'm doing that week's, and then Wednesday night forward to Friday, I'm doing the following week's. So
the reason I asked was that I think Gene mentioned it last time, is that when there's a big discrepancy between the IV for that week and then the next week's options, if it's almost like a 90 versus a 60 kind of thing, then this week is much better to do than the next week. And like for NVIDIA, I did NVIDIA, and it opened right on the strike that I chose. I mean, right on it, on the button. But then it started moving away and moving away and moving away and so forth. So in that particular one, and in that case, I think that week, the IV crush for the week of earnings was significantly higher. That's why I was wondering about the data that shows if you have a big discrepancy, maybe that changes your week that you pick for expiration if you're doing the iron fly.
right. And I haven't tested that, but that definitely seems like a fair and accurate assumption. If that discrepancy is that huge, I mean, looking at those two numbers, where do you expect to get that vol crush from? Like if this week's is 160 and next week's is 70, or like you said, below 100, that vol crush is definitely going to come from this week's options, right? Because that volatility is so much higher than it normally should be. So that's fair. Yes.
Gene, yeah, that and another thing I wanted to ask about, like if something blows through the long strike, like way up there, like a lot of them have done lately. And I know that a lot of times we're hoping they'll come back down closer to the mean, but sometimes they don't. So what if you waited until, I think, was CRM one of them that today?
It was today, yes.
Did it blow through? Did it?
It did, yes.
Okay. So what if you went in today and used a different at the money strike for next week? Because if you use the same strike yesterday for next week, you would be looking at it. I don't think it's going to come back down personally.
Right.
So I'm just wondering, maybe that's experimental. Some of them come back down, but a lot of them don't lately. And then your next week is kind of screwed too, if you know what I mean. So,
right.
So I remember that CRM was just added to the Dow, or will be on.
Yeah.
Part of the reason for the extraordinary up move kind of thing for that particular stock.
So if you use that same at the money strike for next week on CRM, you're probably not going to make it on that one either, unless you go in today and see if there's a way you could do an iron fly on it with new at the money strikes. I don't know.
Yeah, or just switch to a bull call, because that would take advantage of falling volatility and rising price.
Yeah, but sometimes they don't rise anymore.
I'm sorry, a bull put. I meant a bull put. I'm sorry, I meant a bull put.
Yes.
My bad.
I agree with you, Dave, on that one. Yeah, I do. Yeah.
Yeah, and that would be something to test. And I was even looking at some of those earlier, but I don't have many strikes on mine above the $300 range on Salesforce. So I was looking at maybe selling a call spread, right? So doing like a bear call spread. So selling a call spread above 300 and trying to collect premium and thinking that volatility is going to go down, because that volatility still for this week's is above 90 when you're looking at some of those. I don't know what it was yesterday. I didn't mark it, but that's all. I haven't tested those, so that's interesting to think about. Now, Gene, are you talking about selling the same strikes that I did yesterday, or selling the strikes based on where it's at right now, which is 270?
The experiment would be selling based on the strikes today, because if you sold based on yesterday's strikes, I kind of feel like it's not going to come back down since it is being added to the Dow. I don't think it's going to retrace down to what the original at the money strikes were.
Right. Yeah, which I did 217, which we're at 270. So, you know,
Yeah.
I'm only about $53 away, you know, so hey.
Well,
But so
I tried to get into that one at the same thing, Shawn, and it didn't get filled, and I was so glad this morning.
good.
But I did get into Dick's, and it went through my strikes too. So I'm sitting there with that one as well. But it's not a big, my max loss was only 145, so I can deal with that. But
yeah.
it's just like, I'm just curious when these things are going right up through those strikes. It might be better to wait till the next day and just see about either selling the bull put or trying another strategy, or
Trying a different one. Yeah. Yeah. It's hard to figure out. I mean, and Dave mentioned obviously them being added to the Dow could be a big component of why you got a 25% move on the stock. I mean, they did come out with really great earnings based on, I think, the expected move, right? Like their expected estimate was like 19 cents, and I think their actual was $1.44. So pretty massive in the whole scheme of things based on the earnings expectation, So it would be interesting to see. I mean, we can always look at that. Like I said, I don't always, I never disagree with me having a strategy and somebody making adjustments to it. And as long as we can test it and say, over time, or, there's the win percentages there. I mean, I always like to see those numbers, because then that just gives me a little bit of a backing behind what I'm looking to do. And we have the tool, we have Delphian to where we can do it. So, let's always do it. Now, I do need to look at what I was looking at real quick, is if I pull up, I don't know again what the IV was yesterday. I can look here. I was just about to run that screener, but let me see. So if I come here, I keep doing stocks, I'm sorry. So what I want to look at is what was the IV of, those options yesterday, right? What was that implied volatility for those options? I'm going fast, but I'm going to options chain, CRM. I'm going to go in and pull up the 28th, which is what I did. And if I look at that on the graph, so we can see, the implied volatility on these options at the close was actually fairly low in relationship to what I would think it was, right? 74.
Yeah.
These are options closing yesterday. 74 implied volatility for at the money options. So 75, let's say 80. So not crazy. I mean, if we're looking at the options right now, if I'm looking at the same options right now, at the money, we're talking about 60% or so. So it dropped a bit. But if I do look at September 4th, which are next week's expirations, 55, 56 and change for the at the money options. So not, not extraordinary different from what I would have thought it would be, right? I would have thought this here would have been about, above 100 for sure. So, it hasn't changed that much. So that might be something that we could look at and see kind of how that would play out,
Mm-hmm.
But yeah, if I had seen this at like 150 and I had seen September 4th now at like 55, then I'm like, okay, wow, well that IV definitely dropped dramatically. So that crush is pretty much out of there, right? But now it might be interesting to see. You use Thinkorswim, right, Gene? So maybe you can track it. I'll track it too. I'll put it in my Analyze tab before the close and see.
Okay.
And I don't know if it would be better to put it in. That would be something we would just have to test once we get that intraday data. Is that a strategy that's better to place, 30 minutes after the open, because that volatility is still probably pretty crazy in that particular market because it did move so much? Or is it better to do it at the end of the day? I'm thinking at the beginning of the day. But
like for instance, Shawn, what if you just went in and set up one for next week on this, because it's so far above what it was,
right.
But you're going to use different strikes. You're not going to use that 217.50.
Right.
Like,
right. I would use exactly what you said. I would probably use the 270 as my selling options,
or at least the 265, in case it did come back down a bit.
Right. Yeah.
I don't know.
So I would use something around there. And if you're looking at selling those options, you know, you're now, so 270 put, 270 call, you know, we're talking about, you know, you're talking about almost $20. So give me 1 second. I'll show you real quick.
Although I still like selling those puts, like Dave said, I like this. When you
So you
see,
can see
if you
that's
can
what-
get some premium on that, yeah.
right. And so that's what I'm looking at here. You can see, I just wanted to show you what I was talking about. So 270 is about where the stock is now. So here's your 270s right here. So your 270 puts around 10 bucks, 270 calls around, you know, 960. So almost $20. So if we did something like that, you would be looking at, like, let's say just sell.
Yeah, it does, by the way, it does actually get added to the Dow. It didn't, I mean, they announced it, but it happens next week. It doesn't happen now. So there's probably a good chance that it's going to keep going up for people that just have to buy it because it's moving into the Dow and all the ETFs that, you know, mimic the Dow or whatever. And it was a good, I was thinking about doing the iron flying until I heard that announcement. And then I said, well, let's just take off the call side and just sell the put side, because I couldn't see a reason for it to be,
To go down.
two really good reasons for it to, you know, be bullish rather than bearish. So, and that turned out to be a fantastic trade. So
Yeah, I wish you would have called me ahead of time. That would have been good.
Oh, you did that, Dave. Good. Yay.
yeah, the half fly worked out perfectly on that one. So
But yeah, so you can see, I mean, Gene, this is what you were talking about right here. I just did it in the Analyze tab below. They don't have a 290, so there's no 290 strike available right now, which is interesting, right? Because I have all selected, so it's just showing me up to 285. But if I was going to do it 20 wide, but if I do it 15 wide, you know, we're collecting anywhere from 10.50 to like 11 bucks, you know? So not bad. I mean, interesting to see. And you're
So what
talking
was
about,
the risk? What was the risk?
so
$5?
$15 wide. So if you collected 10.50, you're risking, you know, you're risking what, 450 or 350,
Yeah, okay.
right?
So would you do it right at the new strike there, or wait till the end of the day to see if it comes back down? I mean, you know, that would be something to think about too.
Yeah, right. And actually the risk, if you did it at 10.50, the risk would be 450. So you'd be risking 450 and collecting 10.50. I
Yeah.
said that wrong, sorry. But
Interesting.
yeah, I mean, I would think your IV would probably be higher in the morning, right? Like right when the market opens, if you let it settle down a little bit, 30 minutes afterwards or so, your
Yeah.
IV would probably be higher because everybody's still buying it, you know, or selling it, whatever the case might be. So, but I'll run this in there. I'll keep it going in here at 10. You know, I'll track it and we'll see what happens, you know, so.
It seems like some quarters, they always kind of retrace back down to the, you know, close to the previous at the money strikes. But this quarter, they just don't.
They
just
haven't.
don't seem to be coming back. They're just staying out.
And a lot of these seem to be really tech heavy, right? So a lot of your tech stocks, it seems like, you know, have just been running, like Josh and I were speaking earlier. I mean, like Apple, Facebook, AMD, I mean, those companies have just been nuts, you know? So
Yeah.
it's just like, I mean, I did that strategy where I rolled it and I just basically sold those in the money call spreads on Apple. I sold them on Facebook. I sold them on AMD. I sold them on Disney, and stocks just kept holding up. So I think, you know, like I mentioned before, it's hard to fight just this bull market right now. So, I mean, you just keep fighting it, thinking, okay, it's got to give at some point. It's just not doing it. So some of these are just really big movers right now. So
Yeah. Okay.
Yeah.
Interesting.
I don't have any insight on why, but everybody's just wanting to buy them, I guess. So hey, so be it, right? So let me get back over here. But no, I mean, we could test it and see, you know, test that strategy out and see, because I don't disagree. But then you got to figure out, all right, is this one going to be a big mover or not? Or if you say, I don't know, then maybe just don't trade the stock at all, right? So that would be one too. So
I still like selling the puts, like
right.
Dave and I
Yeah.
are put sellers.
Yeah, I mean, I agree. And in this market environment with everything going up as it is, and if you can get, you know, good premium out of selling those put spreads, I mean, I like that trade too. Like I said, I used to not be a big proponent of it. I didn't like it as much, but now I think you can kind of get consistent profits by selling those put spreads, and especially in this market environment with the stock, you know, the market's going up. So, but yeah, so basically, what I did was I just went in here. I pulled up the entire vol crush list. So what I want to do is I went into earnings calendar. Still leave this 0 to 30 is fine. I hit vol crush. So that loaded already for us. If I go into here, I can actually go all symbol list, type in the symbol list that I just created, you know, which had, again, 6 or 7 stocks or so in there. And I'm only looking at those 6 or 7, you know, symbols within this analysis tool right now. I don't have to look at, you know, all 70 or how many ever I would be able to pull up. I can come down and I can just change a couple things. These parameters I haven't set them yet, but 40% of max profit, 400% of my max risk. I leave this all the same typically. If I hit analysis, and then what I want to do is hit bulk. So if I hit the bulk analysis, it should run the analysis on the iron butterfly strategy for all, for 6 of these different companies here that we're looking at. So once that runs, we can look at that data, and that's what I've been looking at. So let's see. Does anybody have any questions on kind of how I ran through this portion real quick? All right, cool. So what I'll do is once I pull this up, I don't usually sort it by earnings. It's already sorted by earnings, but I'll come and I'll sort it either by profit factor or I'll sort it by win percentage, either way. But if we're looking at it, there's really only 2 that pop up as positive profit factors, net app and then workday. So those 2 come up. Now, I might want to look at the other ones a little more in detail, you know, kind of run some other analysis. I know Ulta last time was kind of like what Dave said his NVIDIA did this time. Ulta, I had a really hard time getting filled last quarter, but pretty much that week's expiration, it opened up right on the money at the options that I sold, and I think I would have sold it for like $1,700, and it would have pretty much made $1,700, you know, within a couple of days because the options had expired that Friday. I did the following weeks, and that one would have worked out as well. I tracked them, but they were really hard to get filled. So I think that's something that we've noticed lately, or that I've noticed at least, is some of the ones that have those lower open interest and lower volumes have been really difficult to get filled. And then when I have been getting filled on them, they've been basically exercising me on some of those options that are in the money. So then I've had to, you know, kind of get out of the trade and get exercised on them. So I think that's something to look at now as well. Those lower open interests have been hitting us with exercising some of those options. So yeah. So looking at these are kind of what I've been doing. I've been exporting it to Excel. We can click on that, export to Excel. You can open it up after it exports it. It's going to open up on a different page, and I'll slide it over. Hold on. So it opens it up here like this. I kind of just come in and make some adjustments to it. You know, and like you guys have mentioned before, there's some fields here that we don't really even care to look at. So what I'll do is I'll maybe delete this field because I know it's in a vol crush. But yeah, I mean, you know, just do some formatting of it. And then typically what I've been doing is if they're lower, you know, maybe I'll just mark these in red because the profit factor isn't at 1 or it's lower than 1. And then the others I might look at in orange or yellow, however we want to do it. But that's up to your preference as well. But I'll have these here, and then I'll just run some quick analysis on those real quick to see if there's, you know, maybe do they have low open interest, or, you know, what is their IV based on what we talked about on that previous screen or things like that. Make some notes here, and then, you know, be ready to trade them if I actually want to trade some of these based on that vol crush strategy. So, you know, I think like we've noticed now with a lot of these tech stocks moving higher, you know, being a little more selective on some of these might be more prudent now just because of the way some things are moving. But you know, I think there's still some great trades to be had within this section. So, you know, we've discussed it before that it's a little more intensive than some of the other strategies, but it doesn't mean that it's not beneficial for you to test them, follow them, and maybe make some trades on them when you see them. So adding another tool to the tool belt, as a lot of people like to say. So any questions on that? Anybody? Nobody? So this is what I did. This is kind of the one that I had set up already that I was kind of looking at myself for this week. I did it on Sunday or Monday. So some of these were, you know, so when I ran this list on Sunday or Monday, a couple of these had already changed. So we had earnings for Monday. I think Monday was 8/24. Yeah, 8/24 for this Hormel maybe on 8/24 before market open, but or actually, sorry, the BBY 8/24 before market open, but it was actually on 8/25 before market open. Same thing with MDT, a couple of these. So the DICs I think had changed maybe. So we can see some of them. So I just go in there and I try to verify the date real quick to see if I can, if some of them kind of are a little wonky for some reason or whatever. But yeah, so this is kind of what I've been doing. For today, I had, what did I have on? I think the MDT, which is on this list. MDT is this one here, 80% with a good profit factor. I actually did that one. I think I sold it for around 290 and it's at about 330 right now. So I'm down a little bit of money on that one. Autodesk, 60%. So I look at the win percentage to see what the win percentage is, but if it has a positive profit factor, then I go back and I do a little more research to see, okay, well, the win percentage is low, but is that based just on the, is that based on the end of the day data, or is that based on some other factor? What's the reason it's causing that? And I'll look at that. So I did this one, actually got out today for a little bit of a profit on Autodesk. I did that. They had earnings come out last night or this morning. Salesforce, we all know what happened there. I saw this one with a really good profit factor. I was like, wow, that looks really nice. I didn't do the DICs. I did the Intuit. I was able to get in and get out fairly quickly on that one as well today. And then some of the other ones I haven't done yet, but you can see over here, I put the NetApp and that Dollar Tree on the side just to kind of look a little further at those. So we can see those have positive profit factors as well. So just some notes of kind of what I make. Tiffany is another one that's coming up that looked pretty good, but it's really low open interest, really low volume. The bid-ask spread is really wide on some of those. So even though the profit factor is nice and the win percentage is nice, just trading it would be probably a nightmare. So these are just kind of ones that I've been looking at, kind of how I run the analysis and what I've been doing. And like Josh mentioned, we're gonna, we're working on the earnings plan for next quarter. So we're hoping to have, if I can get the list that I had this time of about 140, knocked down to a more manageable list that's a little bit better candidates, then that's what I'm trying to do for this one as well. So any questions, anybody on that?
Just one comment on they're getting ready for the next earnings season, or Q, the next one. Well, you and I talked, or I remember talking to you on the phone about, the idea for all the pre-runners and the ball crushes to have a long option in place before the volatility picks up, right?
Right.
And the idea that I was kind of, my rogue idea I was floating there was, why not try to get into the long option, mostly calls here if we're bullish, like right at IV at the very lowest point, which is usually just a couple weeks after the announcement of earnings, for the next time to put on either a calendar or a diagonal trade where you're trying to buy the long option well ahead of time for the cheapest possible price and deferring some of the costs with a short option you're selling against it. And I was, my idea, by the way, I put together, we talked about semiconductors. I put together a spreadsheet with all the semiconductors on it. And I'm trying to figure out I'm going to use the Delphian ABCD, just quality or value assignment, and then look to see if I can put the pre-runners against that list and see how that turns out. So maybe I'll have a better spreadsheet by the time you do the March or the September, get together here, the monthly meeting.
Yeah, the earnings, and that's something we can look at too. So when we have that list of next month's, it'll be good. That's what I mean by seeing a stock that maybe shows up on your bullish pre-runner, but it also shows up in your vol crush, and putting those two together and then kind of coming up with a combined strategy like that, for those two, since you think since the analysis shows that those two would benefit from a trade like that. So no, I think that's an interesting trade. So we just have to kind of get some more data to look at it.
Right.
But yeah, and then Josh too had mentioned earlier, when we were talking earlier before the call, we had talked about that, being able to have a screener. So when we come into our custom screener section here, to be able to add another one like you're talking about, like your IV rank or your IV percentile, where it shows you based on, you know, relative IV, where does this stock or where do these stocks lie now? Are they at their lowest point, which is the time when, like you said, Dave, you'd want to buy those options, or is the IV at a mid or like a high point to where you actually would want to, you know, stay away or maybe sell those options? So we're trying to see if we can talk to the coders and Ashok to get a screener like that to where we can have it added in here, so then you could add that as portion of your screened in criteria as well. And then hopefully it would give you a, you know, the analysis of, okay, now's the time when the IV is, you know, typically the lowest or is low comparative to what it usually is.
That would be cool.
Yeah, so we're trying to, that's what Josh and I, Josh had mentioned that to me earlier actually. So if we could get that, that would be great. So, so yeah, so that's a strategy pending too. I think once we get the list with Josh, we'll work with you, Dave, and the group, and we can kind of get together and brainstorm and put something together. So good. Other than that, so since there's no other questions on the earnings file, I went through it fast, but like I said, we've kind of done this many a time. So, you know, the past couple of weeks have definitely been a little rougher, more rough than normal for sure, doing some of these trades. So I hope everybody hasn't lost confidence in it. I've still found some really good winners in there, but I've definitely taken some decent losers too. I mean, again, I did the Apple, I did CRM, I did Facebook. So I've had my fair share coming along for the ride also. So, but some of the bigger ones have been working. Tesla's been working, you know, Amazon worked, Google worked. So, you know, with some good, there's been some bad. So I think it's staying consistent on these and making sure your risk is appropriate and being able to hold that risk. Because if you do a trade on CRM where your risk is, you know, 300, but then you do a trade next week where your risk is $50, the proportionate of winners versus losers isn't going to help you in the long run. So we want to try to make sure we're keeping that risk, you know, fairly even. And if you can't keep it even, either just don't do the trade or try to make an adjustment to where you can, because keeping the risk consistent is where I think you're going to see the increase in profit and the increase in the value of the account versus not. So.
Hey, Shawn, I have one question.
Yes.
I did the Iron Butterfly with MDT, and it was a $4 range. So it was 100, 104, and 96. And currently it's always staying within that spread width, but I'm still making a loss. So I'm quite not understanding why it's a loss if it's staying within the wings.
Right. Yeah, I mean, I think some of these, like we mentioned, I mean, I got to look at that one. I was just pulling it up on the other screen too, because I'm in the same exact one. So I'm in the same exact trade with the same exact strikes and everything you're looking at as well. The 96, 100, 104. And I mean, the open interest is a little bit low. Let me pull up the actual strike. Sorry, let's see real quick. So give me 1 second. I'll switch over. All right, so you should be.
So I always thought if it stays within those, you know, that range, you're making a profit. But you know, now I'm seeing otherwise.
Well, sometimes too, I think you have certain stocks where those premiums stay in there. But I mean, that's where we want it to be. You know, we want it to be in those widths. And right now, you know, it's a little bit above. If you can see the screen, it's showing it's at 104, and I have the 104 short here. It's giving me a value of 343 right now. And again, you know, what we're looking at is we're looking at the bid-ask spread of basically these four options. So this one is a 96-put, pretty tight bid-ask spread, not that bad. This one is the 11 cents at 14 cents. That one's fairly reasonable too. If I come over to the 100 call, 20 cents difference, and this one is only 4 cents. So really the bid-ask spread on this trade here is pretty tight. So even taking the average between those four options, we should still get a bid-ask spread pretty close to it. But yeah, I mean, I have an order working, you know, I have my order working to get out at my 40% and it hasn't hit it. It's kind of just running around. But yeah, as long as you're within these wings, you're sitting at a pretty good spot. But if my width is $4 and the stock's at the top end of that width, the way I look at it is I look at it, okay, I'm pretty much at a max loss right now because it's at 104 and 104 is my max, right? And I collected, let's just say I collected 260 for the trade. If I collected 260 for the trade, I really want the stock to be within $100 plus or minus 260. So I want the price of MDT to be within the 97.40 and the 102.60 range. If it's outside of that range, then I'm probably taking a loss on the trade. If I'm looking at the whole at expiration, which will be this Friday. Does that make sense?
To answer Russ's question though, if he did hold it all the way to expiration and he was within, within the bands, he would actually not lose money. He might have to deal with a assignment, being assigned on one side, but as long as you're within the bands all the way up through to expiration, can you not lose?
No, you would take a loss. So if you can see on this trade here, if I collected 260, right? So I'm collecting 260 for doing this trade. The most I can lose is $4. So my break even on the upside is 102.60. Anything above 102.60, I'm taking a loss. Now at 102.61, I'm taking $1 loss, right? And then all the way up to 104. And then after 104, I don't care if it goes to 200, I'm at max loss once it goes above 104, which would be $1.40. So really my break even on this trade, if I collect 260, my break even is going to be 102.60 and 97.40. So anywhere between 97.40 and 102.60 is where I want that stock to be to break even or make money come expiration, which will be Friday. But if it's at 102.61, then I'm losing $1 at expiration on Friday because I collected 260 and it's because I collected 260, but now my short call is actually 261 in the money. So I've lost that $1. Does that make sense?
Yeah, it does. Yeah, it does.
Anybody else jump in if I'm not explaining it because But yeah, anything from 260 up to $4, I'm giving back $1 every ticket goes higher of the actual, I'm giving back money essentially, or I'm taking a loss, excuse me. So really, at 100, I'm perfect. Anything from 100 to 101, I'm giving back $1 of the 260 I collected. Now I'm at 259. If it goes to, or not 101, I'm sorry. 100.01 and so on and so forth. So every tick up that it goes, I'm actually giving money back of the 260 I collected all the way up to 102.60. Then I'm break even. Then 102.61. Now I'm giving them money back. So not giving them money back, excuse me. I'm giving them money. I've already given all my money back. Now I'm giving the market money out of my pocket. I don't know if I explained that right.
So in essence, you have to look at like the 102.60 and the
That's
97
right.
and not so much where your wings are ending.
Right. That's right. Yeah, your wings are really just for protection. Your 104 and your 96 is just kind of like your oh crap protection, right? But yeah, really you want to look at that break even. So the break even is always going to be the money you collected for the credit, and then add that or subtract that to the options that you sold, and those are your two break-even levels. So if, like on this one, like you said, 97.60 or 97.40, excuse me, and then 102.60, that's your sweet spot. And now some of them too, I mean, like a Tesla or even here, if this price is fairly accurate, you can see that even though it's above my 104, I'm still maybe able to get out for, let's say in the perfect world, I was able to get out for 350. So they're still basically giving me $50 off of that being that far in the money. But maybe that's just based on the fact that there is a couple of days left on the trade, or, they do still have some value in those put options that they're giving me too. So, that's what it is. But as of right now, if I look at 104, I'm like, all right, I'm just at a max loss on this trade, and I got to hope for the next couple of days it comes back down and drops below that 102.60 range. And we can see, I mean, today alone it was up $1.70. So. So if you look at the chart, you know, it was, yeah, it was 102, which would have been perfect, but now with this spike up, so. But we have a couple days left on it, so. But I have the same exact one, so I'm looking at the same exact trade right there.
Now, how do you calculate that 97.40 and 102? I know it tells you when you make the trade where the break even is, but after you make it, if you don't write it down.
Yeah, yeah, you just have to if you know what you got filled on the trade, just take that and subtract it from your short option, your short put option, and then add it to your short call option, and those are going to be your break evens.
Like that one right there, for instance, you collected 350.
Well, this one I think I collected like 290 or something, but 350 is what it's worth, what they're showing it's worth now.
Oh, okay. So you collected about 250. So you'd add the 250 to the 100 and subtract the 250 from the 100 to get your break even, where you'd start making or losing money. Is that right?
That's correct.
So 100 and 250. Do you see that, Russ? You and I were
Okay.
talking about that.
So Shawn, do you set alerts at your break evens?
I don't. I mean, I kind of look at, I know what my break, so let's say I knew my break even was 102.60. I mean, I really just look at the stock price and say, okay, you know, I kind of get an idea of, okay, it's at 104, you know, or let's say it was at 103. I'd be like, all right, well, it's at 103, 102.60 is my break even. So I should still have, you know, I should be at break even or maybe a little profit depending on how much time's left on the options. You know, yeah, if it's above my outer strikes, then I know that that I'm above and beyond that. So I just got to hold for it to come back. What I'm going to try to do is see if I wanted to look real quick. So let me get you guys back over to this side, the Delphian side. So if I did cancel. Let me just go into one. I don't know which one of these are. Morning coffee with Lee. Let's add a position. Let's do something like the CRM. Sorry. So let me just look at this real quick. So if it's at let's just say 215, and we're talking about 13 here, but let me just add 15 to make it even real quick just to see. 200. So it shows you here, okay, so we're collecting 938, right? So if I was doing this trade live, we can see for this iron butterfly, basically on CRM, I'm selling the 215 call and put, and I use 15 bucks of my width. So 15 bucks on the upside to 230, 15 below to 200. I'm collecting 938. So it shows me my break evens here. So what I would do is I would add 938 to 215, and I'm going to get 224.38. So not my strike above. That's just for protection in case it wants to run like it did today. But looking at it that way, 224.38 on the upside, 938 minus 215 is 205.62 to the downside. So I really want it to stay within this range here for the sweet spot for basically me to make money on this trade. So I want it to be below, you know, I want it to be, between roughly 206 and 224 come expiration of these options on September 4th. And if it stays within that range, then I'm going to break even, and if it stays closer to 215 it gets, the more money I'm actually going to be able to keep of the 938 credit that I received when I sold the trade. So any doubt, you always want to look, kind of come in here into that virtual portfolio, type it in there, look at these break evens right here, and that's really where you want the trade to stay. And you can see it within the graph here too. You know, this graph is going to show you your profit zone is basically right here to right there, between those two. I don't know. I mean, I've kind of looked at it, the risk profile in Thinkorswim, but I'm not comfortable showing you that yet because I could probably show you some wrong stuff. But I think they have that in Thinkorswim as well, where you can see a pretty cool risk profile. And you can actually change the price of the stock and show you like, all right, the price of the stock changed $50. Where does that take me and things like that? But I don't know exactly. Once I figure out how to use that, I'll let you know. But yeah, use this because this break even is where you want it to stay. So even though I bought the 200 for protection, you can see there's still $5 there that I have a problem with, right? Yeah,
So all the more reason to go out beyond the expected move. But when you do, then it's harder to get your 2 to 1.
That's right. Right. Yeah, I mean, it's trying to really figure out that sweet spot, right? I mean, the expected move is what we calculated as being the most probable place to put those strikes that you're actually buying for protection. But yeah, I mean, if in theory, if you could get, so this, let's just say this is $13. This is $13 here. So let's just say it's $13. If you could get a $13 credit for this trade, like you said, then that would be perfect, right? That you would basically be getting a credit of the expected move of what that stock should be moving. So you would have that expected move, $13 on either side of your 215 strikes. But to do that, how far out do you have to go? So let's say $13 is the expected move. Let me bump this up to, let's just say 245, if they have a 245, so that's 30. And then 185. So I'm getting close, right? So now we're talking about 13, but now we're still at 1172. So let me take it up another $10. Let me drop this down another $10. All right, 1244. So we're almost there. Let's do it one more step and I'll stop. So $10 here, $10 here. All right. Oh, that's not right. All right, so that shows there must be a wrong quote in there for some reason. This quote here, see the mid price on this one is wrong. The mid price on this one is definitely wrong. So I noticed that I went further away from my strikes and my credit got less. So I knew something had to be wrong. So you can see that my 265 call here, the bid-ask spread is really off because it's 47 cents at 420. So something's really askew there. So that's not.
And your max risk is 3,950.
Yeah.
So we're going in the opposite direction with reward to risk.
Right. So let me change that to, what did I just change? 260 to 170. So now this isn't the $13, but close to it, right? And then like you say, Gene, I mean, if I look at that, I'm saying, okay, well, wow, now I'm collecting $13. But my risk is, basically double that, almost 2.5 times that. So I can get it to where my expected move, my credit equals my expected move, but how much more risk am I adding on the trade to do that? So that's the problem, right?
Yeah.
So in the perfect world, if you could still get maybe a 1-to-1 risk to reward and be able to collect that expected move, that would be great. Because that's kind of what you're wanting, but I just don't, they're just not going to make it that easy. So.
Okay.
So yeah, so this is always something really good to look at. This basically your break evens here. Type in the trade, figure those break evens out, and they'll give you a good idea of basically where it should be based on that. So.
Thanks, Shawn.
Yep.
Thank you.
Yep. And then, so other than that, the earnings slide stuff, there's, like I said, there's a couple to check out for this week and use that screener, and I'll see if I can get something together so we can do that. Another thing I wanted to show you guys off of, does anybody have any questions regarding the earnings fly stuff? All right. So one thing that we added recently that I want you guys to note is I'm able to create a stock list. So let's say I created this stock list. Where am I at? So let's go into my organizer real quick and then go into my stock list. So I have a stock list here that we just created, which was the earnings within 4 days of all candidates. So what I can do is I can actually come in here, change this from private. I can hit team, and I can actually, I don't know who's all on this group, but I can share it with the group. I should be able to share it with the group once it comes up. Let's see. Share. All right, so maybe not.
John, it takes a minute to move over.
Say again? Yeah, just taking a second. It shouldn't take that long, but maybe it's adding all the names. So what we can do is it's loading. So but what you can do is you can come in here, we can share a stock list, and I can share a stock list with everyone on the call or with anyone that uses Delphian typically. And now with the shared stock list, you can actually duplicate that stock list. So what I'm going to show you is, so it shared it. So if I share, I don't know if I have any shared stock lists. So what you can do is you can go into your organizer, your stock lists, and you can pull up all the user-defined stock lists that you created, and you can also pull up any shared stock lists that anybody has shared with you. Before, you couldn't use that shared stock list anywhere within the system. You'd be able to look at it and say, oh, Shawn shared these 6 stocks with me, great. Now, are there any that I want to actually use it? And then I can create my own stock list. But now you can go into the shared stock list, look at it, and you can actually, so let's just say, you know, this is one maybe that Ashok had shared with me. Let's see if I click on it maybe. So what I did was you can go into that shared stock list. Sorry, guys. If I click on mode or click on the name, excuse me, integrated stock list, it's going to pull up the entire stock list that Ashok had shared with me. If I hit duplicate over here, it's actually going to tell me that the integrated stock list was saved. I can change the name if I want to, but I just left it the same for right now. So integrated oil stock list successfully saved. So I should, cross your fingers, Josh and myself, I should be able to come in here under my user defined, it shows up as integrated stock list now. So now I can actually use this stock list anywhere within the platform that I want to. So if I wanted to go into stocks and let's just say state modeling, and I go into my stock list, this integrated oil stock shows up and I can actually use it in the system as my own stock list now. So I believe I shared that stock list with you guys, and you should be able to go in there, pull up your shared stock list folder, and actually save that list into your system, and then you could use that list of 6 stocks that we created earlier to do some further analysis on there if you want to do so. So it's a cool tool. Like I said, thanks to Push, but she had mentioned that I shared one with her and we couldn't use it, so we were able to kind of get that duplicate tab in there, and now you can actually duplicate it and save it into your system and use it yourself. So that's a cool feature. And then also what I wanted to ask is the Word document that I created that we kind of went over 2 weeks ago for the bullish state 2 back test that we did. Has anybody looked at that? Does anybody have any questions, comments, feedback on this stock, on this, excuse me, back test that I ran through?
Shawn, this is Sudhir. I looked at it.
Did you find it useful or just kind of too much, or any thoughts?
Well, I haven't had a chance to try it, but I did go through and haven't had a chance to try the trades yet.
Sure.
But it looks very promising because your back test showed, I think, about a 75% or better win rate.
Right, I think so. If I scroll down, you can see. Oh, sorry. Yeah, 82 on that one. Yeah.
Yeah.
Sorry. Let's see. I can.
And yeah, I was waiting to actually for this meeting, you know, to see if you discussed it further and went through it in any detail, any nuances you wanted to add beyond what's in the document.
Yeah, definitely. Yeah, and that's why I brought it up. So I'm glad you read it, and yeah, please everybody look at it and kind of get familiar just with the process, because I think that the entire process is good to learn, you know, how to back test it and kind of make some adjustments. But really, the main portion of it is the screener. So you know, typically we're going to say, you know, state 1 bullish, state 2 bearish, odds are bullish, evens are bearish, and then kind of just run with it. But really, there's more analysis that can be done, you know, based on that and based on the screener. And that's really what I wanted to show everybody by doing this is, like, you know, use the information for what we tell you it's worth, but then obviously, use some other, deeper, analysis tools that you have to kind of run some further analysis and see if you can find other things in there. Because that's what I've been doing. When I pulled the screen up originally, I had this back test that I did earlier was, okay, well, getting whacked on all these things recently and all this stocks going up and everything making these big moves. Well, let me just look at stocks that are in, state one that haven't hit their target one yet, or maybe stocks that are in state one that have hit their target one, but they haven't hit their target two. And are these stocks that, if I run that list, are these stocks maybe that I still want to buy, or maybe are these stocks that I just might want to hold off on and not buy them? So, I kind of run through that analysis myself, put it in the screener, see if I can find some good stuff, and then kind of just expand on it. And that's what I did here. I mentioned it to Josh earlier, is I tried to find stocks that are in state one, and I wanted to find stocks that have bounced off of their low from, February, March timeframe, but they're also not, above the high. They haven't made like that 100% return like some of these other stocks have, like Apple and Facebook and, many of the other stocks that you're looking at right now that have made these, enormous moves since February or March. So trying to find a stock that hasn't performed that well as of yet, but maybe it's poised to catch up, and maybe it will catch up to the rest of the market and just in due time, and maybe before the election or, before the end of the year. So that's some of the analysis I've been putting into the screener and trying to figure out myself as well. This was something similar. Like I said, this was, if I click on this little mode button, it should pull up the reason for the entry exit date. Let's see if it does it. But we can see, the bull puts running about 88%, the long call running about 75%, heaps of trades rejected. So I got to look to figure out what happened there. But this is basically just stocks that have transitioned into state one. So what I did was I ran that screener like we talked about. Let me get out of here real quick and show you. Stock list. So I went into organizer, stock list. This is the stock list somewhere. Where did it go? I did that right here. So I created this stock list here based on that. So stocks that have transitioned into state one and then haven't met their target one yet. And I got a list of about 51 stocks that are currently in that section. So these are 51 stocks that I might want to look at to say, hey, okay, they're in state one. System says they're bullish. They haven't hit their target one as of yet, so they still might have some room to run. Can I make some further analysis on these to see if maybe there's a buying opportunity within this 51 stocks? And, I can't guarantee it, but I almost want to guarantee you that there is probably some good buying opportunities within this list that, might prove fruitful over the next, couple days, months, couple months. So, we can see some big names here, Dunkin' Brands. I looked at Dunkin' Donuts, Walt Disney World, but there's some you might want to avoid too, right? Boyd Gaming. I mean, we all know what's going on with some of the gaming stocks right now with Las Vegas and Macau, but some of those areas are picking back up. So that might be a good opportunity based on some of the things happening. So unfortunately, we're kind of in a weird environment right now where we really haven't been there before, but excluding this environment, I think you could use some of this information, and even including what we have going on right now, you can still use a lot of this information as well. So really look at this document, kind of run through the process of it, but let this document kind of help you figure out maybe creative ways that you can use the screener to come up with some good lists of stocks that you might want to trade, whether it be a long call, a Mary put strategy, a vol crush strategy, a strangle straddle, whatever. But that screener is really powerful, and it's kind of getting in there and just being creative and using it. So,
Shawn,
yes.
One step that I use on when I get the stock list is to use the grade. I always choose the A and B. So I kind of refine it from there.
Perfect. I mean, that's an awesome way to do it as well. And, Pushpa and I has been looking at that also. So saying, okay, we have a stock. So what I'll do is I'll show you real quick. So coming into the screener, what I've been looking at too is, and similar to what you're saying, is I'll go into my custom screener. And so maybe I'll say, okay, show me state modeling, state targets. So I can do state one, not met target one, let's say. And then I can say, and remember guys, you can always add on top of this one too. You can add the same screener on here, but in a different way. So state one, not met, stop loss one, let's say. So it's still in a pretty tight range. So hasn't met its target one, hasn't met its stop loss one. And then like you said, I can come in here and go into fundamentals. I can look at my grade and say, okay, show me all the current growth A. I don't know if any will show up, but if I hit find stocks, and now I have a list of, roughly 12 stocks that we could look at. So basically all of these stocks on this list here, they're in state one, haven't hit their profit target yet, haven't hit their stop loss yet, and their current grade, they have a current grade A in the fundamentals section. You can always do, let me expand this to make it smaller so we can maybe see everything. So you can always click on something up here, hit score if you want to do that one, and it's going to sort them all by score, 100 all the way down. So now you could say, well, maybe I only want to look at stocks that, are in current grade A, but their score is at least a 90. If I click outside of that and hit find stocks, it should delete those last 4 right here. Maybe I don't want to look at those 4. So now I can look at just these. And so now I can say, okay, well, so all these stocks might be some pretty good stocks that might be a great buying opportunity. So what I did was I took that list of 51, like this list of 7 here, and I said, okay, well, let me add it to a stock list. Now let me backtest and say, okay, every time these stocks, these 7 stocks transition into state one, how good is a buying opportunity to buy those stocks using a long call or maybe selling a put spread? And how often is it profitable when I do that strategy? And then you can run the backtest that way and find some really good opportunities looking at, some different stocks that way. So.
Shawn, do you backtest the whole list or individually?
Yeah. No, I would backtest this whole list right here. So I would backtest the whole list, and that's what I did with that list. I don't know how long that would take, but what I did was I'll show you real quick when I go into the backtest that I just performed for that 51 stock list. Here's the report here. So what you can always do is, I did it for the bull put. If you click on run one, let's say you just have one run with that group. And Josh, I think everybody has this ability, right, to group by symbol and stuff, right?
Yeah.
Okay. So if I go into that run one, which is the bull put strategy, once it loads, let me show you what I was going to show you. So I'm in run one, which is the bull put strategy for the 51 stocks I just ran, and you could do it for the 7 as well. I can click on this little icon here, and it's going to ask me, do I want to group it by state, which we all know it's in state one because that was part of my entry. I can group it by symbol, by year, or by grade. Now, we did grade A, so they all should be in grade A, but if I group by symbol, I click on this, and now what it's going to do is it's going to list all the results within that period all the way back to 2007, and it's going to sort it by all 51 stocks that I tested. So what I can do is, it's in alphabetical order now, but I can say, okay, well, maybe I want to sort it by win percentage. So if I click on win percentage, it's going to sort it all by win percentage. So we can see this ACHC has 100% win percentage. It's only been in there 8 times, but 0 losses with 9 rejected. So I got to look to see why am I getting so many rejected. And it just goes down the list. You can see, 100, 100, 100, 100. I could look at all these. I could do it by profit factor. And now it shows me based on profit factor, these are all the stocks maybe that I want to look at. That's why I mentioned Duncan earlier. Boyd Gaming was on this list as well. I thought Lockheed Martin was on there for some reason, but why did it pull it out? So Lockheed Martin's here. Oh, because I did the bull put strategy. I was looking at the long call earlier. But we can see Lockheed Martin, 2.86 profit factor, 89% win rate using the bull put strategy with only 19 occurrences, 2 rejected. So that's a decent amount. So Yeah. So if you have a list of 7 or if you have a list of 20 stocks, I will run it based on, as long as there's not, over 1,000 occurrences going to hit. And then you can come in here and group it by symbol, and you can see a pretty good pullback. I mean, pretty good readout based on that there.
Hey, Shawn, this is Winslow. Where do I get the stage 2 target 3 thing? Is that on here?
The document, I don't know if Josh, I think we added it to that shared list, right?
Yeah, it's in the shared drive.
In the Google Drive. Okay. Fine.
And if you can't find it, just shoot me an email and I can send it to you in an email.
All right. Okay.
But yeah, check that out. But yeah, I mean, this is a great tool right here, guys. So, if you run a back test and you have multiple symbols, use this little analysis tool, group by symbol. You can also do it by year and kind of get a good analysis based on a year. Might help you or hurt you, I don't know. But you can look at it and say, okay, wow, there's 3 main years, 2008, 2011, 2015, when I actually lost money. Some years you can see, like 2018, would only made $101 off those 51 stocks. But, we didn't have that many trades that year either. We only had, around 55 trades. So, yeah, so that's a pretty cool one to use also. So please do. Yeah, take a look at the document. Give me feedback on that if you can. And if nobody has any questions, that's pretty much all that I wanted to go over. And then as always,
Shawn, would those
yes.
be the trades that you would do like right now, or within a period of time?
These are within a period of time. I basically just ran this as a state 1 transition. So what we might want to look at is, since I did it on those 51 stocks, we might want to look at when some of those stocks transitioned into state 1. They haven't hit their profit target yet on the long stock position, based on state modeling, but that doesn't mean that they have not hit their profit target yet on, if you bought a long call for that 25%, right? So I would maybe need to make an adjustment on that, not just entering into state 1, but maybe some other adjustment. But you could take that list of 51 stocks and say, hey, send me an alert, let's group it by symbol real quick, and let's look at this win percentage. Just doing it based on win percentage, you could create a list of all these stocks right here, these 3, 6, 8 stocks, and you could say, okay, every time these 8 stocks go into state 1, send me an alert so I can do a long call strategy or maybe a bull put strategy. And so then anytime these stocks enter into state 1, you'd get an alert, and you could say, okay, every time Duncan enters into state 1, I just want to basically buy a long call or sell a put spread. But this is a mix here because I did just enter into state 1. I don't know when all of these entered into state 1. They could have been in there for a handful of days. So that might skew, my results a little bit if I was to enter into it right, today. Does that make sense?
Yes.
Because when I did, you could do the test that way and just say, you could add in there when you do your screener, you could say, they had to just transition into state 1. But if they just transitioned into state 1, those other 2 screeners that I had on there wouldn't be valid because they wouldn't have had time to hit their target 1 and they wouldn't have hit their stop loss 1 either. So that state 1 transition would null out those other 2 screeners, right? Because there's no way for them to hit their targets because they just got into the state 1 transition that day. So, but that was just something I ran, like I said, last night off the cuff. That's not a tried and true back test. I just wanted to kind of show you that. That's something I was running last night to kind of get an idea of saying, hey, market's bullish. It doesn't want to seem to slow down. Let me try to find some stocks that might be bullish based on, state modeling. And like you said, you could add that grade in there to add that on top of it as well and say, okay, well, all these stocks are grade A stocks. It looks like they're going up based on state modeling. How do they perform if I was to buy them whenever they transitioned into state 1? So.
Hey, Shawn, it's Dave.
Yes.
A quick question on the stock list building that little exercise you just kind of went through. If, for example, on the stock list that I'm putting together for semiconductors, I pulled that from a third party and there were some that weren't in Delphian. Some I had didn't even know about until I made the list from, I can't remember where it was, Zach's or someplace. But if I pull that list into Delphian, import it in there, and there's symbols on there that don't exist in Delphian, how does Delphian treat those symbols that aren't there? Does it just ignore them, or does it put them on, build a stock list with the symbol name anywhere, but, blank data that, maybe that'll get added someday or whatever? How does it treat symbols that aren't there yet when you import them?
Yeah, it'll say, if you import 100 symbols and only 50 symbols are within Delphian, it'll say 50 symbols imported, and the other 50, it just pretty much, writes
Okay,
them out.
so if they did become symbols in Delphian later, you'd have to know that later and add them, correct?
Right, you're right.
Okay.
Redo the list. And I don't know how Ashok would want to handle this, but if you're importing, if anybody's importing lists like that, keep them to the side, maybe email them to me, or I'll put Josh's hand up too. Email them to Josh, and we can say, hey, these are some semiconductors some people are looking at. Can we get these added, or what do we need to do maybe to get these added in the future? And we can maybe kind of push those towards Ashok and see what they want to do with them. But yeah, you would have to redo that stock list moving forward. Yeah, and most of those stock lists, depending on how you're creating it, if you're creating it just by sector, as long as it doesn't change sectors, it shouldn't be that big of a deal. But if you're creating it based on, like we've talked about before, price or any type of indicator that is dynamic, then that stock list could change, because that particular criteria could fall off the list, or other criteria could come on the list from other symbols. So you always want to make sure you're updating them. Just like we've talked about, we need to update the the liquid options list because some of those prices has moved. So yeah, you're gonna have to do that if it's dynamic like that. But yeah, some of those earnings, like the ones I was pulling from Zach's, when I was pulling that stock list and importing it, I'd get the same, where it was, I'd have a list of 140 symbols, and Delphian would say, okay, we've imported 101, and there's 39 that weren't in the system, and those 39 are just kind of, off in space somewhere at that point. All right, cool. If no questions from me, I appreciate it. Thanks again for the time as always. I enjoy talking to you guys. Like I said, I learn a lot, and hopefully you guys learned some stuff as well. Any questions, feel free to email me or call me, and we'll take care of them that way. And if you need help with the platform, definitely feel free to set up a demo, or you don't need to set up a demo, just call me and we can get on Zoom and work it out.
This is Winslow. Maybe this is for Josh. I have a plebeian question about, I'd like to add your Google Drive, shared drive, as a bookmark on my Google Drive. How do I do that? You sent me the link, which is gone.
I put the link in the chat. I think you can make it a favorite. When you open it up, it's like.
Yeah, you know what? I accidentally signed off and I signed on again. So.
Yeah, so like when you take that link and then you can just paste it here, and then make it a favorite. Like once you're in that drive, you can just hit that, make that a favorite. I think it's the only, I don't think you can make it in your drive.
Yeah, all right. Can you send a link in the chat thing again, because I accidentally got off the thing.
Sure. All right. Copy link.
Yeah, Winslow, I've added it as a bookmark so that I can keep finding it.
Right. Okay. So
yeah.
It's in there now.
Yeah.
Okay.
All right. So I'm going there, and I'm just gonna. God, I hate Google so much. All right. Wait. You're gonna walk me through this.
Okay.
So I'm on my drive. Share with me earnings trades. Okay, there it is. So now I'm going to do what?
Oh, you have it shared with me?
Well, it just opened up. I clicked on it and it says, share with me, earnings trades.
It should stay in there. Yeah,
And
like,
then yeah,
yeah, it should stay in there permanently. But what Gail did was when you click on the link, you can just, and it opens up, you can just hit that favorite and make it a favorite.
Yeah, that's what I'm talking about, just to get to the Google Drive.
all right,
And
what is,
wherever
what
it's
is,
stored, I just saved it as a favorite.
what does
or
favorite look like?
It's this little star up here.
Okay,
Bookmark this tab.
I see, done.
Got it?
Yeah, okay, let's hope it works.
Yeah, it should work.
Yeah,
I think this shared with me should also work. No, no, that should have everything that's ever been shared with me is down.
earnings trade.
Yeah. It's good.
Yeah, I just went down to my bookmarks. There it is. Oh,
Jack,
yeah, I got it. Thank you.
sure.
What browser is preference, Google or IE?
Well, yeah, funny. It's Chrome is preferred. Now, I occasionally have issues with Chrome. So, like currently, I just, I submitted something and it like stopped. So then I moved to like, you can go to another browser. And of course, it's working perfectly fine in that other browser. So occasionally I have problems with Chrome. And I'll just, like, if it's acting weird, then I'll just switch over and, like reboot. And, usually either a few hours or like the next day, it's fine, back to normal. But so I'm like 99% in Chrome. And if it's just like acting slow or weird, then I'll try Internet Explorer, or you can do like Edge. Any of that. Sorry, real quick. It may be running fast over there, and it's just a Chrome thing. So, like currently, right now, when I pull it up on here, it's super slow. So I opened it up in the Internet Explorer, and it's fine. So, I updated I found the correct bullish bullish pre-runners. So this has the whole enchilada, I believe. Yeah, I think this has everything. So I went over and then best trade. So take a look at that. I don't know, some weird save thing went on. Yeah, okay, so it's all there. They can review those two. This one's, I'm going to do a couple iterations, but you're more than welcome to look at the Volrise Q3 there. So one thing I did want to point out, Shawn did a lot of work on this State 2 Target 3 Met, and that's the basis for like a bunch of our studies. So like, we do things where we add in other indicators. If you just look at this purely, it's probably a good strategy by itself, that State 2 Target 3 Met today. So the one thing I did want to point out, so if you go through all these instructions, sorry, someone's clanging. So if you go through all those instructions, sorry, I'm flapping all over right here. And you can see at the end, okay, this is, a long call. So you can, at this step here, if you go in and change to, the strategy that you want, bull put, bull call, long call, whatever, or you could just run it multiple times and have, run 1, 2, 3. That's what I normally do, like long call, bull put. So once you have, say if bull puts like 92%, you're like, oh, that looks great. From there, all you have to do is, and I'll show you, let me open a new one. and we haven't talked about this in a while, but like when you go through those back tests, and there's ones that you like. So this is bulk 1 year, whatever. So if we did all 3 tests, right? And I'm like, okay, well, I like, you know, the bulk call the best or whatever. So you pick the one that you like the best, and then you hit daily alert. Okay. So you can change the expiration, you can change the name here, but this is going to be something that will populate just like, you know, studies any day. You know, so it'll screen for those characteristics and it'll populate the actual trade. So like if this one was, you know, these are examples. So this met the criteria of a 3% drop in 3 days in state 1. And, you know, it's buying a put, it gives me the expiration, the strike based off of all the testing that I did. So it'll keep looking for these every single day. So if you like that state 2, target 3, or you want to add in more characteristics like, you know, grade A, grade B, you know, into your parameters, you know, once you do those and then create the back test, you know, make sure you create the alert, so then it'll just populate these trades, you know, going forward. So you won't have to use the screener to look for them each day. I mean, that's the ultimate goal, is to find more and more strategies. So your alerts are just populating each day. So, you know, you can go through, I mean, we have lots of ways to find trades, you know, so we have what, like studies, we have state transitions, we have seasonal, we got earnings, and then, you know, anything else you can create, you know, would be in these alerts that, you know, it'll automatically screen. And this is just, you know, if you have a good strategy, and that state 2, target 3, you know, that's something you want to, I would recommend going through and doing that whole exercise and creating that back test, and then create an alert on that for, you know, either the long call, bull call, or bull put, you know, so you can see, so those can populate each day, and, you know, it's one less thing you know you have to screen for if that's something you want to look at every day.
What do you mean? You have opening and closing trades. What's
Yeah.
the intention?
Well, these hit like either stop losses or profit targets. So,
I mean, why is it in the closing trades? I don't understand.
well, I like, so these parameters, let's just say I had like a 50% stop on the bull call or on the long call, and a 25% profit target. So one, you know, these were opening trades either a few days ago or a while ago. So once they met that criteria, you know, for either a profit or, you know, they hit the stop loss, it's going to show you as a closing trade, you know, after those have been met. Do you understand that?
So these are conditions after a close that it happens.
Well, after you opened it, and now it's telling you you made your profit, or you got.
So is it just telling you, okay, close it when the closing trade comes up? It's saying here, you made your profit that you set, and then go close it, kind of like an instruction to do it?
Yeah. Oh, I mean, it's after the close, so you'd have to do it the next day.
Right.
You know, but it's still telling you, okay, you met your target.
It's kind of like you should have closed if you see this alert.
Yeah, if you didn't do a limit order dummy, then yeah, it's like a reminder, you know?
Okay.
Yeah. Or if you get stopped out, you know, like depending on whatever your parameters that you set up. So that works, it works for every strategy. I mean, you can put iron butterflies in here for, you know, a strategy, and it'll populate them, and anything like that. So this is like, you know, the more advanced, like once you create a strategy, you test it, it looks good. Now you want it just to populate, you know, forever. This is where it would come in each day.
Now, is that providing that you made the trade, or is it going to come up regardless?
It'll come up regardless. Yeah, so like if you have a, it should have a, yeah, I don't think it has a trade button here. So you should be able to do, there should be a trade so you can do like live. So you'd have to manually input it at this point, but yeah, this will populate regardless of whether you use it or not.
Okay, that's cool.
Yeah, so I would recommend, everyone go through and do that state 2 target 3 met today instructions, and then you can create alerts off of that. Either your long call, bull put, whatever one you want to use. And then you can see each night it'll scan it for it, and you'll get an email saying daily alert. So it's nice and easy. Once you do you got to do the homework though for the like other strategies, but Shawn gives you that one, and I think it's a pretty good something you would want to look at each day.
I just printed it out. I'm a slowpoke. I will read it.
That's good.
Did you not say that it's similar to one of the Delphian studies?
Yeah, well, it's less restrictive than like the one, like the 1 year. So all it has to do is hit state 2 target 3, and it'll meet that back test. The 1 year or other studies, they put in other criteria. So I just think, it's worth looking at. Okay, this one was in a study, but there's 2 others here. Maybe it didn't meet the criteria for a study, and Facebook pops down and hits state 2 target 3. Maybe that's something you want to think about, as far as a trade. Does that make sense?
Yep, gotcha.
Okay, yeah, run through it. If you guys have problems, reach out to me or Shawn. We can always Zoom and help you through things. So don't hesitate. That's what we're here for. We're doing a bunch of testing and work behind the scenes, but we always make time if you guys need to Zoom or meet. All right. I think that was the big thing we wanted to discuss. Yeah. Okay. I guess the other things is seasonal. You guys still been trading those seasonals? Just I just want to keep track of how people are doing with these. Obviously, it's been a pretty strong market.
Actually, I mean, I go through it probably almost every day, but not too much. The same ones come up, and a couple of them aren't worth trading because there's no interest in them.
Yeah.
So not too much is showing up, and I usually run through it every night anyway, so and see what came up for the day. So.
Okay. Yeah, I mean, I think it's a pretty quick, part of your routine. You can, look. It's really quick. Once you have it, like the parameter set up, you can bulk test it, if you have a bunch. So it shouldn't add too much time to look at those trades. Anyone else?
Hey, Josh, I got just a general question. You started the session and you mentioned that Delphian wants to make this public. Kind of thing. Does that mean that we could maybe invite other people that like to join the group, if you will, or not?
Yeah, I mean, we're going to be using Delphian platform, but yeah, if other people want to join the call, feel free to forward. It's not restrictive, but I mean, it'll be focused on using, we're going to be in here like 95% of the time in the platform, so. But yeah, well, I was talking about, I'm making these video replays public on YouTube. But yeah, feel free to invite friends, if they're interested, and you can have them, you can forward them some of the replays, see if they're interested and want to start with a group. All right. I guess we'll move into general questions.
I
Yep.
have one.
Yep.
Option screener, full puts. It has a subcategory, widgets. How do you use it? What's the intent?
I don't even know what you're talking about.
Okay, if you go to bull puts,
Widget. What? In here?
yeah, well, no, there's also something that has a widget in it, and
Yeah. I don't see it. Let me check. Come on. See, my Chrome's not working. Let me check the other one. Oh man, I don't have the password. Yeah, I can't. Is anyone else seeing a, can you go in there and see if you have a problem? I don't have my other password on this Internet Explorer. Well, can you make a screenshot of it?
I was gonna say it's definitely in the options screener. That's where you've seen it?
yes.
Okay.
Yeah, I don't see anything. If you have a screenshot it, yeah, that's it. I don't see it. I don't think anyone else. Yeah, if you see it, just screenshot it, and
Okay.
I can figure it out. Anyone else have questions? Anything about the platform improvements, feedback? We always appreciate that. No? Okay. All right. Well, we'll finish up the session here today. Thank you all for attending. I'll send out the replay, and in the meantime, you guys have anything that comes up, call or email me or Shawn.
Thank you.
All right. Thank you all.
Thanks, everybody. Appreciate it.
Thanks. Thanks.
Yeah.
Bye-bye.
Thank you. Bye.